So thank you. So today's session is about traders' beliefs and trading system. So it's all about what the traders believe. We all believe in something. We all filter information based on our beliefs. We have a identity belief, we have a spiritual belief, we have a market belief, we have a belief about the world. So all that beliefs we filter, and then we have our biases. So there are different biases. You can search on the topic of neurological biases, social biases, individual biases. Then there is a deep topic. People or filters. These are filters, and then based on these filters, traders create biases, and then they bring these biases into the trading, and they lose because they have a they are the brain is wired improperly. As we grow, we wire our brain improperly. Just like, you know, electrical system. The house I bought is 110 year. So one of the house I have is 110 years. So when I was evaluating it through the, the market, the inspection, so that person told me, hey, this house has a knob and tube, 110-year-old electrical system. It's very hard to rewire, but I still bought it because it's a classic house. So just like that, and I hope one day I will rewire it. So just like electrical systems, so our brain is wired and we keep on messing up. So, so I'm not a psychologist. If you need to refer to improve your trading, this is not some kind of a voodoo. We have a problem. Traders have a problem. So recognizing the problem is halfway, you know, winning. So so you are here beyond your comfort zone. So right now, I appreciate it's Sunday, 5 p.m. Pacific. Um, you have a desire to learn and improve. I can see some of them are like a repeat. They don't miss any of the sessions. Some come and go. Some don't think this is useful. They want hot tip. So if you're looking some hot tip, this session is not for you. So there's a no hot tip in this session. So the success comes when we break the comfort zone. Any profession, anything we do, we break the comfort zone. The success is there. It's just waiting. I strongly believe in it. So so we all believe in that. And just intro. This pie chart I got from internet a few years back, and I think it is still true that 70% of traders they lose money. Only 11.5% of the traders they are the winners. 18.5% are the break-even traders. 3 years of data. So there's something these traders are doing. These 11.5% who are winning, and there's something they are doing. These 70% of the traders they are losing, and something these guys who are in 18.5% pie, they are almost in the winning section, but they do something and they come into the break even. So at least they don't lose. So there's something they're doing to break even. So they're trying, and majority of the traders they're losing. So it's not. So if you ask the winning guys, 11.5%, and the 70% guys, they would take the same trade in 11.5% winners. They will. If you watch them, they are doing certain things in a certain way. So they're doing certain things in a certain way, and the traders who are losing, they are doing certain things in a certain way, and they are losing. So just be aware. As also, this is my belief. So I'm sure what I'm teaching today is my belief. So this is the starting point. Um, you have a belief that you will learn something out of this session. That's why you are here. I have a belief that I'm teaching something. I feel inner satisfaction. And guess what? Whoever teaches makes learn the most. So when I'm so when I select a topic and I do the research, I have to spend time and do some hard work. But when I'm doing the research and I'm thinking, I need to put this thing in the slide, or I'm taking a shower, or I'm eating lunch, and then or I'm driving, and then suddenly I say, I need to create that slide, or maybe I teach that topic, and then I start doing the research. I read books, I do the research. Internet is there. not the YouTube, but internet. So guess who is making, who is learning the most? It's me, then you. So so make the trading. Trading is the hardest profession, but you can make it easy if you spend time. So I've been spending time for last 15 years. I've been doing it. So now the success is there. Those guys, 11.5%, they're doing certain things in a certain way. So the research is done, and the experts say there are three ingredients to successful trading. One ingredient is the beliefs. So I'll talk to you about the belief, and I'll show you some beliefs. And then there's another aspect called mental states. So the successful trader, the top traders, they have a certain mental state at any given moment. And then based on the mental state, they pull out the resources based on what resource is required for that particular mental state, the processes, the sequence of the steps, and what they need. So they pull out those resources based on the mental states. They have a process for that mental state. So think about that. What mental state you need for any given moment. For instance, the mental state you should be right now when you are studying or listening to somebody, or the mental state I should be when I'm teaching. And then the mental strategy, the third ingredient is the mental strategy, the sequence of steps we take in order to do certain things. So anything in your life you're doing, there are certain steps you're doing. The first time you do, you mess up because you don't know, like I give you example of real estate. Okay, I don't know, I put the floor first and then I putting a painting. So if I paint the house after I put the floor, I will mess up. So next time I know, okay, I need to paint first. Maybe the floor goes later. So same way in the trading, also you need to do certain steps. Uh, um, Step A comes first, then step B, and then step C. So if you're constantly aware of the steps you take in the trading, you will improve your trading and the mental state you bring to any at any given moment. So the different mental states are required at a different stage of your trading day. So knowing beliefs, mental state, and mental strategies, these are the three ingredients of successful trading. So I will explain to you about the belief a little bit. So these are the big topics. So I'm just uh, teaching you in only about the little bit about the beliefs and how it relates to trading system in just 1 hour session. So imagine just 1 hour. I'm just giving you a preview. So um, so the beliefs. So beliefs. I have explained just a second. So what is belief? Belief is a mixing bowl. So different we have a certain beliefs when the moment we are born and grew up, we start adopting the beliefs. So beliefs are the mixing bowl. They hold ingredients of success, and certain states of mind are conducive to success. So when give you example, if I believe that the market is going up, if the market is bull market, I would trade according to my belief that the market is a bull market. If I believe the market is going to crash, I doesn't matter what I see in front of me. I would trade based on my belief that the market is going to crash. So this kind of a belief and the mental states block successes. We filter the information based on our beliefs. We don't evaluate what is actually happening in the market. So what is belief? Beliefs are the models of reality. We create our own reality from our own beliefs and thoughts, which may not be true. So we start filtering about the market based on our beliefs, such as this market is going to crash. I need to sell all my position. I need to go cash, or I need to buy puts, or this stock will recover, even though it's tanking, is tanking. But we have a belief that this will recover, or this 200-day moving average will hold, or this 50-day moving average will hold, or they will come up with a new product, and in front of our eyes we see that stock tanking. So that's our belief. We don't want to acknowledge that we are wrong. So I'll explain to you, give you little contrast to a mediocre trader, the trader who is in a break-even uh, situation or losing compared to the trader who is a top trader who is winning. So this is what the mediocre trader believes during the day. So he's believing, he's thinking, when he sees the chart, he's saying, okay, I'm sure that candle is telling me something. So he sees some candle and he says, okay, this candle is telling me something. Or I'm sure stochastic is giving me sold out reading. So he's reading the stochastic and he's saying, okay, this is stochastic is giving the sold out is in a oversold zone. So this stock is going to bounce. I am going to position my trade. So that's his belief. Another belief, when the stock is tanking and it goes to 200-day moving average, because we believe that the 200-day moving average act as a support. So now it's at 200-day moving average. So the stock started tanking when it was at 50-day moving average. So initially we had a belief that the stock hold 50-day moving averages. So it and we are losing when it comes to 50-day moving average. So okay, it will hold. Now it broke 50-day moving average. So when it breaks 50-day moving average, we go and do some research and we find that the 200-day moving average is also a good moving average to consider. So there's a big difference between the 50-day moving average and 200-day moving average. We can see clearly, and the market is breaking the 50-day moving average, but we hold because we now believe that the 200-day moving average hold. And in between 50-day and 200, while the stock is tanking, we go and do some research. Let's find some other moving average, or maybe we put some Bollinger Band or do something that will confirm our, give us the confirmation that this stock is going to stop from tanking. So all that we are giving false hope based on our beliefs. So we have all these beliefs. Another belief, I think market will tank soon. So what the traders do when they say, I think market will tank soon, because they hear something, they sell all the winners. So they are liquidating their position. So think about it. A trader who has 10 position, and there 5 of them are winners, 3 are losers, 2 are, let's say, break even. So he get this belief that the market will tank soon. So market will tank soon. He go and immediately sell those 5 winners, which are about to go up further. And the 3 losers, I mean, how can the loser be sold? So loser, no, cannot sell the loser. So only the winners can be ring the register. So ring the register, feel good, see the green, based on the belief that the market will tank soon. And then the 3 losers, because they are losers, how can we? Um, no, cannot sell that. Those 3 losers. So they need to come to the break-even point. Then we will sell. So we set the exit to the break-even point. If they are losing and we set it to the break-even point, the break-even point is like 10 points away. So it will, God knows when we will reach the break-even point. And regarding the break-even, so it's just at break-even. So I might as well hold a little bit. Maybe I make some money before the market tank. I will know when the market is about to tank, and then I can sell. So what happened? The market doesn't tank, and then the market starts moving, and those 5 winners just keep going and going and going, and those 3 losers keep going and going and going, and they are going down. The 2 which were break even, they are also losing. There was an opportunity to sell. They don't have a belief that the break even trade is also a win trade. So no. So those 3 losers become, watch them grow bigger and bigger, more red. The 5 losers, the 5 winners that we had, we cashed it. So we have cash. Now the market is going. And then what we do, we change our belief. No, this market is not tanking soon. So we go and buy those 5 stocks back at the higher price, way high. And then the market is, then something happened. And those stocks, they start to tank. And then shoulda, woulda, coulda. beat themselves up that I was right. So yeah, I was right. 2 months ago, I was saying the market will tank, and finally the market is tanking because it's just a cycle. So 2 months ago, I was saying the market will tank soon, and 2 months later, it came soon. So that's the belief of a mediocre trader. They trade like that. Another one, I'm sure market is telling me something. So there is always, I'm sure this market is telling me something. This is about to take off. I bet it's gonna take off, and it doesn't take off. It just takes off on the other side. It goes the other side. And then another belief, I'm more successful in downtrending market. So I would wait when the downtrending market occurs. When the market is bearish, then I'm going to trade. I go cash. So they forgot that the downtrending market only lasts a certain number of days. So if you study the market, most of the time the market is either in the sideway, 70% market is in the sideway, or it's trending up. Market is trending down little percentage, like 15 or 20% of the time, and it's a sudden down move. It happens fast, and by the time we realize it's over, and the volatility is so high, we don't know which way to. It's like a wild beast. You're trying to hold it with the tail, and it's just making you go round and round and round, and then you lose all the money in a downtrending market also. And then you wait, and then you change your belief. Then no, 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 not downtrending market is, I will trade the uptrending market. So it goes on and on and on. Another one, another one is, I'm sure T-bills are going to have a major correction shortly. So T-bills, now go for T-bills, go for the bond market or go for the housing market, Fed rate, or what the Janet Allen is visiting to China, what she will say, what they will say, what's going on in Ukraine war, and all that is going on and on and on and on. So all these beliefs, um, traders believe, and they put on the trade based on their beliefs, and they go round and round and round instead of seeing what is happening in the market and trading accordingly. So there is a big problem. So generally we are I don't know, I don't know if you have a word, let me know a better word. We are like a ridiculous. So it's like ridiculous traders. We are ridiculous traders. We do all that. So each trader has beliefs filtering information about the market. So you see, uh, different trader, if there are 1,000 traders in the room, 1,000 traders have different beliefs about the market. There is no objectivity. Each trader has unique filters about the market. So different filters. I will show you more slide, the different filters about the market. And they have their own, they are creating their own reality every day. They come to the market and expect the market to do certain thing in a certain way, and it doesn't happen because they bring their beliefs. However, the top traders, so this is top traders beliefs. So this is beliefs. The top traders told himself or herself that I'm the most important factor in my trading. I create my own trading results. I'm aware how I function every day. So the top trader or a trader of the people who are successful. So I just whenever I'm feeling doing something and I say, Jeff Bezos will think like this or not, or Elon Musk is thinking like that, like me, like the way I'm thinking, or what Warren Buffett will think, or Ray Dalio is thinking. Am I thinking like them, or am I thinking like a ridiculous person? So I remind myself that I should not be ridiculous. So I'm aware of my emotions. So always regulating the emotions like a thermostat. So, like sometimes 68, sometimes 66, sometimes 77, or not 77, 70, 71. So regulate and be aware of your emotions. So, and in control of your emotions. And every day when trading, we need to remind ourselves that this is our beliefs, and I'm aware of my beliefs. Now, the beliefs I have, they could be a useful beliefs, or they could be a non-useful belief, trash beliefs, or they are useful and I'm not utilizing it. Some beliefs are conflicting beliefs. So one belief is saying this, and another belief is saying that. So they are conflicting, and I need to eliminate the conflict. Some beliefs, they are non-useful. So most of the beliefs are non-useful. So we, I'll show you some beliefs in the next few slides. So some beliefs are non-useful, and then we cannot get rid of those beliefs. And the reason we cannot get rid of those beliefs because some emotions are attached to it. So um, we cannot get rid of those negative emotions because they are attached to us. So even though the market is going up because we lost money, so we get paralyzed and we don't trade that market, and the market goes through the whole cycle of uptrend and a strong uptrend. And the reason we are not trading that market because we have a strong emotion attached to it. We are fearful of losing money. So and it's and the belief is that no, um, this market is about to crash, and the market keeps going up. And the reason we have a belief that the market is about to crash, and in the background the emotions is attached because we lost money, so we don't trade. So the way to overcome it, so the experts, if you contact experts or you read books or do the research, they will tell you to eliminate that negative emotions you have. First, you need to eliminate that emotion, and then you will eliminate that non-useful belief. Without eliminating that emotions, the fear of losing money, you cannot change your beliefs about the market. So think about how many useful beliefs you have and how many non-useful beliefs you have. So this is and then we are very good in telling a story. So we create stories every day. You know, so doesn't matter if you are 5 year old, 50 or 90. We are all creating stories. So this is when we tell the story to ourselves. So I put some. It's like a Excel worksheet, so you can see non-use. It's like a table. So on the left is a non-useful beliefs, and then on the right is the useful beliefs. So think about it. Non-useful belief is they are out to get me. So who is out to get you? I don't know. Uh, who they're out to get me. Useful beliefs. I create my own life and others to help me. So that's a useful belief, not the belief that they are out to get me. I need to be perfect. So if you need to be perfect, you can just keep going forever till you die. You will never be perfect. And the useful belief is I'm good enough. So I'm good enough. My trading is good enough. Now I need to put that into practice. Maybe I do some simulation. There are traders who do they do the research. They keep doing the research. They keep perfecting the indicators. They keep finding that perfect moving average. And so if there are 365 days, there are 365-day moving averages, simple moving average, exponential moving average, and there is adaptive moving average, weighted moving average, and a moving average crossover, and this and that. So it's never perfect. There's not enough to go around. So there's plenty to go around. The people are becoming millionaires every day. People are becoming billionaires every day. So there's a plenty to go around. So think about the days before Elon Musk or Jeff Bezos or Mark Zuckerberg or whoever is getting becoming a billionaire. So there's plenty to go around. Life is rigged and unfair. Life is full of possibilities and opportunities. So every day there is a trading opportunity. So come to the market with this thought process. Only the wealthy can do this. So, meaning only, you need to be born rich, do this. No, you can become rich, especially in America. So, I mean, I don't know. People say, oh, feed the homeless in America, or I don't know why the people are homeless in America. So that's my belief that there shouldn't be any homeless person in America. So I can do this, useful belief. Life is a struggle, life is fun. You have to work hard for everything. Things come easily to me. So work hard for everything and then they don't do. Yes, you have to work hard. But just thinking that I have to work hard and then don't move my ass, then I got a problem. So I need to move my ass every day somewhere. I'm not just sitting around at home. Need to get out. Things come easily, then things come easily to me. I will never have or have enough. No, I am enough. I have enough money, love, time, intelligence. I mean, I'm blessed. So always think that we are blessed. If I'm not in control, I'll be out of control. I can handle whatever happen in my life or trading. So think about that. So You see these beliefs, useful beliefs and non-useful belief. The government should do something about this. So just um, I don't know if when Democrats are in the party, I don't see them making money. When the Republicans are in the party, I don't see them making. I mean, it's up to me how to get rich. So it's not. There may be some little effect, but it's not the government. I'm responsible for my life. No one in my family gets ahead. So the past is not the future. It's not my fault because of what my parents did. So blame the parents. uh, you know, blame the parent. It's all a case of blind luck. So, and this is a big thing, luck. So when we win, we when we win, we identify our win with our skill. Look at me, how great I am. When we lose, we blame it to the luck. So there's another problem. Now, here is the checklist of trading beliefs. So think about there are 3 slides like that. So see if you can relate to one of these beliefs, maybe more than one belief. I like to trade using fundamentals only. So there are traders who just trade fundamentals only. There are traders who, um, if the stock is not fundamentally strong, they don't trade, even though it's going up. So even though it's going up, even though they are short-term trader. So even though they are short-term trader, they are looking at the fundamentals. I like to trade with technical analysis only. So this is their belief. They just trade based on technicals. So they don't care about fundamentals. I like to trade with the trend. So trend. So yes, the trend is good to trade with the trend, but then you have to identify the trend. What time frame are you looking at? The monthly time frame, weekly, or a daily, or a 5-minute trend? So they get confused. They say I like to trade with the trend, and they go and look at the 5-minute chart, and they're looking at the trend on the 5-minute chart, or they go on a weekly chart and they look at the weekly trend. On a weekly chart it may be going down, but on a day chart it's going up. So if you want to align your trade, you can do that, but make sure that you are looking at the trend according to your trading horizon. Another belief, I like to buy dips. So buy dips on what time frame you buy dips? Is it a daily time frame, or you buy the dip on a 5-minute chart? I like to sell rallies. So if you sell rallies, on what time frame you like to sell rallies? Is it a why do you sell rallies, first of all? I mean, and why do you buy dips? I mean, just for the buying the dips. Are you sure that when you buy the dip, the stock will just go up after you buy the dip, or just keep buying the dip? Or why you're selling rallies? So you have 10 stocks, uh, 3 are losers, 2 are the winners, 5 are winners, and 2 are break even, and you sell those stocks which are rallying, unless you are 100% sure that the stock will stop going afterwards. Or maybe you're just a short-term trader and you sell the rally. I like to hold position as long as necessary. So as long as necessary, it's a good um, good strategy to hold, but only hold the winners. So not just based on the number of days. I like to hold position for a short time. So why hold only the short time? How do you define this 1 2 day, 5 days? Does the stock doesn't go up after 5 days? It won't go on the 6th day or 7th day? What happened? What will happen on the 6th day or 7th day? Maybe the 5th day was the Friday, and then on Monday it just gap up. So why you have this belief? I like to hold only 1 to 5 days. So after 5 days, the stock just pull back. I like to trade intraday only, closing out all position. So there are traders who just buy um, intraday. So if that's your, so you need to call yourself day trader. So you cannot be calling yourself a swing trader or position trader, and then you closing out all your positions during the day. So this is a conflicting belief. So you see, people, different traders. This is just 7 or 8 beliefs I wrote here. Then another one, another chart. I like to trade a fixed number of shares or contracts. So why do you have belief that you trade fixed number of shares or contracts? Don't you know that This is not a good risk management practice. You shouldn't be buying 1,000 shares of Amazon and then 1,000 shares of, let's say, GE or Verizon or something like a Riot or Mara, $10 a stock. You shouldn't be buying 1,000 shares of something Amazon and then 1,000 shares of something of a $10. So that doesn't make sense. So don't do that. But people have beliefs. They just believe that they need to trade fixed number of shares or fixed number of contracts. So fixed number of contract, I always buy 10 contracts. They say I just start out with 10 contracts. And the reason they start at 10 contracts, because the broker, I want to make money from you. They set the default of 10 contract, or they set the default of 1,000 contract. So they just want to, they don't realize they should be changing the they should be trade, not the changing the default, but they should be trading based on their portfolio size, based on their risk profile, based on the risk they think they can tolerate on one given position, then based, and then they calculate the price of that stock or price of the contract. So they need to put some effort into the formula in the Excel worksheet or a little notepad or a calculator, then figure it out the number of shares or contracts they buy. So traders have a different belief, and then they get clobbered. So when I send the trade alert, people send, sometimes I receive the alert. Oh, you send the alert, but you didn't tell me how many contracts I need to buy. So how do I know all the things about you, about your portfolio size and all that? So I cannot. So it's your own. It's you who know how many shares you need to buy or contract. Another one, I like to trade a small number of markets or stock. So some the day traders, they only trade 5 stocks. So if you have a strategy, so this may be a useful belief that I like to trade a small number of markets or stock. If you are successful in consistently trading those small number of markets or stock, like 5 of them, and you have a certain strategy, certain trading system, so it's good for you. So this will be a useful belief. But if you are not, then you're restricting yourselves to those only 5, and then missing out all the other um, 900,000 and whatever stocks are there. I like to trade a diversified portfolio, more than 10 stocks or market. So this could be a useful belief. I like to trade using cycles because I can anticipate changes. So think about the cycles, the moon cycle, the sun cycle, the Jupiter, and I don't start my day without the sun is there and the moon is there and the Saturn is there, and then someone has to bless me, and then I start to trade, and then I wait for that cycle effect to come, and I put on a big trade because I think the during the June, or what is it, July on July 11, my cycle is telling me that the crude will tank. So because my cycle study is telling me that July 11 the crude will tank, so I go and short the crude with all my power, and then I watch the crude to go up and keep going up, and then I don't have any exit strategy. So I don't have any exit strategy. Only strategy I have is to put on a trade based on the cycle, and the cycle tells me July 10 crude will go up, or July 11. So if that is your the traders have this belief, they trade like that, and they advertise like that, they sell things like that. So it's you can believe in cycles, but then don't anticipate based on the cycle. I mean, you don't put on a big trade, wait for the cycles effect to come. You have an edge if you know this is what the cycles do, and you are anticipating. So you have an edge over other traders who don't have this knowledge. But just don't go about creating a trade just based on your thinking that based on this cycle, the market will go up or down. I like to trade price patterns because I can react immediately. So if you're good in detecting the price pattern, this may be a useful belief. If not, then maybe you're just looking at bunch of candles, and you can, you think the market will go up and it goes down. I like to trade with price oscillators. So believe, I like to read the opinion of others on the market I trade. So it's good to there is something called the wisdom of crowd. So, something expert opinion. You take expert opinion, you share, you ask for opinion. But you need to know who you are asking. If the person is just like you, so the 9-year-old is getting advice from a 9-year-old. So, what kind of advice? Um, so my daughter, 9-year-old, what kind of advice she will get from a 9-year-old friend? So think about it. So when you are getting opinions, think about it. Who is giving you opinion? Are they expert in their field? It's good to get the opinion, but find out who is giving you the opinion, who you're reaching out. I like to use my own analysis of price action. So this is, if this is your belief, is good. If you master, you can do the analysis. So you see that different traders are coming to the market with different beliefs, thousands of beliefs. You can write your own belief. A lot of them are useful, a lot of them are garbage. So you can say, okay, garbage, this one is trash, this one is useful, this one is useful, but I'm not using it. Why I'm not using it? What makes me not use this belief? Why I'm not acting on this belief? This is a useful belief. And in the past, I was using it. I was reacting on this belief. I was operating, but now I don't. So why I'm not doing it? So ask yourself. Uh, so so how beliefs drive trading? So trading is a series of probabilities. So I'll show you a little chart. So we come to the every day we take a certain bet. Life is full of bet. So trading is also a series of bets. So I give you the example of a bet. Uh, If I go to bed tonight late, it's Sunday, I go to bed late tonight, the result will come out in the morning because I took the wrong bet. I went to bed late. The result will come out in the morning. It's not. I'm not feeling good. I'm not. And I'm stressed out or I'm sleepy. My brain is paralyzed. I cannot take proper action. I cannot study the market. So I took the bet. I went out. I party. I watch something on Netflix. I ate something heavy and all that. So I took the wrong bet, the result will come out next day. Same way, trading. So trading is a series of bets. So the bet should be small bets. One bet, if we lose on a certain bet, it shouldn't affect our portfolio. So think about that. So a series of probabilities. Any one trade is insignificant. So when you make one trade as insignificant as possible, then it doesn't matter if it's a loser or a profit. But if you see that trade uh, becoming a winner, you need to manage that trade and don't let it go. Don't ring the register. Make it a big winner instead of closing it out. And see some green because we like to feel good. We see the green. I made some profit. Or if we are closing a loser, let's say we close the loser, so losing $2,000. We like to close a winner equal to that dollar amount. Sometime somewhere, like if a $2,000 loser, okay, close this one, $1,800 win, yeah, compensate, go home. $200 loss is better than a $2,000 loss. And that winner trade just go up to the moon and become a $10,000 winner. So there was nothing. That trade was not telling you to close, but you closed it because you need to feel right. And when a loser trade goes into a loser, we don't close it. um, if you evaluate, you may be overexposed in that trade, and it's becoming it's nothing. It's still technically sound. It is still in your defined zone, but you say it big loss because you are overexposed. So don't do that. And bet little. The probabilities of your trading favor you over time. So think about that. Then your trading ideas should be such that in the short term, even though in the short term you see a drawdown, but you know that over the long run you will be a winner. So if you take 10 trades, only 5 are winners, 3 are losers, 2 are break even. You know, if you keep doing it, you will be way ahead in the game. So you are the one responsible for your trading decision. So when we push that button, that buy button, at that moment we are making a certain decision. So think about that. When we push that buy button, we are taking a certain decision. So at that time, our decision may be wrong. So our decision may be wrong. So at that very moment, we need to know that this decision may be wrong. So if I lose, forget about making money. If I lose, if this decision is wrong, I would lose less. If my decision is correct, I will know. The market will tell me, market will give me enough time to tell me that I am right. And then when I know that I'm right, I will add to my position. Because we are so greedy, we want to win next day, we go all in into that trade. So um, you make good trading decisions by going small and then adding to that winning position. If it gaps up next day, okay, at least you made, I mean, it gaps up big time, so it may be compensating. Instead of buying 1,000 shares, you bought 200 shares, but then it gapped up big, so you made good money over there too. There is no need to be right all the time. So remind yourself that I don't need to be right all the time. If I remind myself that I need to be right all the time, then what happens? Need to be right. So focus on these four words: need to be right, and all the time. Need to be right. Need to be right, and need what did they say? Need the feeling to be right. So if need to be right, then we ring the register. When we see the little green, we ring the register because we need to be right. And when we see the loser, if we close that loser, then we are wrong. So if we are wrong, and how can we be wrong? We cannot be wrong. We always win. I'm the winner. So my 5-year-old son, he tells me, I'm the winner. Mm, Daughter Nini, Nini is not the winner, Daddy. I'm the winner. So we act like a 5-year-old. I want to be the winner. So when we see a loser, we don't close the loser trade because we have a need to be right. And then when we see a green trade, we close it and feel good. Feel good. Yeah, need to feel good. Need to feel good and need to be right. So we follow this all the time, all day long. Another one, any drawdown in fund is temporary. So think about it. If any drawdown in fund is temporary, and it's temporary if you are comfortable in closing a loser trade if you bet based on a certain formula, which is a small bet. So how beliefs drive trading? The future of your trading is positive and you feel optimistic about it. So if you're betting small, you will feel optimistic. You will not be overwhelmed with your losses. You can keep your perceptions clear. So if you're trading a small bet and following your rules, your perception is clear. If you take a big bet, then you get paralyzed. And you get paralyzed even though the trade is telling you that this trade is not going to work because you're so much overexposed that you come up with that belief that the 50-day moving average will hold and the 200-day moving average will hold. Let me call my friend. Let me go check read some bullish articles, or let me go call my friend and let me check, get this advice from someone else, and then losses just pile up. And if it's an option, then it's expired. And if it's a stock, we instead of being a swing trader, we become a long-term trader. So it's okay. I can give this a stock to my grandkids. So this stock goes to grandkids. There is an abundance of ideas and wealth to go around. If you lose money, you can make it back. As a trader and investor, you're continuously improving. So this is a department you need to continuously improve. So I will show you a chart where the improvement is desired and why sometimes the improvement is not desired. You don't need to do the tweaking. And so if you tweak and there's no need for tweaking, then you don't realize that there's no need for tweaking, and you're tweaking it because you don't know what other factors are affecting your trading system. So something else is going on. There's nothing wrong with your skill. There's nothing wrong with the trading system you have. It's something else. So being aware that you need to tweak when you need to tweak, and don't need to tweak. If it's not broken, let this is, don't fix it. So I will show you the chart, why people tweak and why you shouldn't be tweaking. The only person you need to compare yourself with is your own self. So um, if somebody is making $200,000 a day, I don't care. I wish him good luck. I, wish him that he makes $500,000 per day. You worry about yourself. Anything can happen at any time for better or worse, and you can handle it when and if it does. So these are your beliefs. So the positive beliefs. So these beliefs directly bring result through your trading. So not only we go about improving our technical skills and read some news and how to trade iron condor or butterfly or ratio back spread and all that. There are certain other things in life that we need to do and we are not doing it. So it's important to manage the money and the risk. This is another department, and trading is fascinating and fun. So if you don't have fun and fascinating and you're not improving and you're not you need to be there. We all need to be there for a long haul. So the one or two trades shouldn't be um, breaking us. Now there's a dilemma of a trader. They go and learn a new trading system. So let's say they find a trading system and they learn it, they hear about it, they buy it, or they go about it, but then they cannot use it effectively. So there is a problem, and then they say, why I'm not able to use this system, whereas the other guy is using and making money. And the reason is that you are not him, the person who created the trading system, or the person who is using the trading system, because that person is that has certain beliefs. So if your belief is not aligned with your friend's belief, then you're not going to make that. Doesn't matter how profitable that trading system is for your friend, is not profitable. It's not going to be profitable for you, because you are you. You have certain beliefs, you have a certain risk profile, you have your age, you have certain portfolio size. Your objective is different than the you may have a certain source of income, other lot of variables. So you cannot uh, just blame the trading system. So think about, you are not that person. All right. What is it? I will teach this after a month, and this is recording is going on, so you can this. I'll send you the recording. I post the recording on YouTube channel, so someone in my team will post on a YouTube channel called The Real Trade Genie. So you will get it, and I will teach again after a month. So another one, filter information the same way the developer of a trading system did. So when the developer of a trading system, or the person who gave you the trading system, he had some filters. So the filters could be a technical filters, and the filters could be the psychological filters. So there are a lot of filters. So if your filters and that person who developed the filters, they are not aligned, or your belief and that person who developed the system um, beliefs not aligned, you're not going to make it. And then there are other variables. Maybe that trading system was developed for a certain type of market. Maybe that market doesn't exist anymore. So that trading system will fail. And you're trying to use the trading system for the market for which it was developed. And and now the market is not there. Maybe the trading system worked very good when the market is super bullish and everything is going crazy. So the trading system works. And then when the market goes sideways, choppy, the system doesn't work, and you're trying to make it happen, and then you start tweaking it. So when you start tweaking the system, there was no fault in the system. It was about the market, but you're not paying attention to what is going on the other side of your laptop. Like right now I'm sitting on the laptop, so there may be something going on the other side of laptop, and I'm looking on this side, and I'm trying to tweak the system, and the market is not there. Maybe another, maybe I change. So as people grow, they change. Something happened in their life they are not aware of, that this is affecting in that event which occurred in their life recently is affecting their trading performance, and then they go and try to tweak the trading system. So know all that. Now, another, before I show you the metrics, etc., examining your belief filters. So this is a big topic. I'm just teaching you for 1 hour, and I'm not an expert psychologist or expert in this field, but I'm teaching you what I learned in my life. So examine your belief filter. So go back to the time when you were successful, or go back to the time when you were made some decision. So analyze your neurological filters. So when you Google neurological filters, you will come up the definition neurological filter, the cognitive biases, the biases like anchoring bias, confirming bias, availability bias. So this is a big topic, and I'm preparing the presentation. I will teach you about the neurological filters, how traders bring these filters into their trading and get clobbered, not knowing that they're applying these filters and biases, bringing those biases in the market, and they are getting deceived. They're deceiving themselves. So there's a deception going on in the market, and you don't even aware of, because you're not thinking like that. And understand how you control your filter information. So these neurological filters, you are applying it and you don't know how you are filtering. You're filtering the information based on what you're trying to, your brain is telling you, or what you're trying to confirm. You want that trade to be a winner. So when you want that trade to be a winner, it doesn't matter what the trade is telling you. You are filtering all the positive information out there in the market and ignoring all the negative information. You're ignoring all the negative information. You are not listening to your experts, your friends, and whoever. You're just filtering the information based on your own desire. So you need to understand how you control your biases. It affects your trading. You need to know when you put the trade on, you had certain expectations from that trade, such as the trade will be 5%, the stock will move 5%. So you have that expectation, your targets, and you know where the stop loss is. So you had that expectation about the trade. So do you know when the trade starts to move, do you know, do you remember when you put the trade, what was your expectations with that trade? Or are you just following some trading signal? So to think about it, you are just following a trading signal, or you had some expectations. And then when the trade start to move, is start to take a journey, then is it following based on your expectations? Is it following a certain map? So it's like on the GPS. So it doesn't matter where I'm going, even though I have been there 10,000 times, I put that address. I don't know where you live, but I live in California, and the traffic is jammed everywhere. It doesn't matter Saturday or Monday. So I put on GPS, and then I know that this is the time I will arrive. And if I see the something going on, not working out based on my expectation, I will make some adjustments to my travel. So just like that, when you start a trade, you need to have certain expectations, and then you need to know if you were making a predictions or your analysis was thorough. So we are not in a prediction game. We are not in a prediction that the market will go up. I predict. So people use the word I predict the market will go up there. So we are not in a prediction game. We are in a trading game, and needs to be slow and steady. So all that you need to ask, how did that influence your trading? And how do you view your investment results with respect to yourself? Is it working on? Is it when you put on the trade, you have a clear cut expectation that this is where your target for profit, and this is where you will uh, get out at a loss? Now, another thing, do you feel less of a person if you lose? Like you beat yourself? So if you beat yourself when you lose money, there is a big problem. Or in any not only in trading, this is applicable everywhere. So if you're beating yourself because you lose, then you have a psychological problem. And do you become a better person if you win? I mean, it's you're the same. So win or lose should not is not affecting should not affect your personality. It's just the money, the portfolio. So it's not changing you. You shouldn't be it shouldn't be affecting you, that you become a better person. Yeah, you feel good, but I see people, they throw mouse, they break their monitor, they throw the computer, or they break the phone or whatever. So it shouldn't be happening. Or when they win, they just raise their fist. Yeah, yeah, this, that. No, I don't do that. I don't think it's necessary. And so don't be, I don't think you should be doing it like a poker face. So when you're trading, and let's say you're sitting in the office and somebody come like your spouse, they shouldn't know that whether you have a great day or a bad day. You you know you are same. What unique filters did you bring to your last trade? So then you need to ask yourself based on this. So this is a big topic, that what unique filters did you bring to your last trade? So was there some biases you brought, and the market was telling you the other way and you kept holding that position, or you got out from the winning trade because you need to be right, you need to feel good. So all that goes on. The top traders, they are aware of that, so they are making the proper decision. So think about this. Now, we make good decisions and we make bad decisions in trading. So every day we make good decisions and we make bad decisions. So the decision we make, there are certain processes. People make great decisions and then people make poor decisions. So it's in everything in life. So is there any particular internal signal? So the key word is internal signal that you usually respond to that leads to poor decision. So think about that. So not only the indicator on your chart is flashing buy, buy, or sell, sell, but there is some internal signal going on in our brain, which is telling us, which made us make that poor decision. It could be fear, it could be greed, it could be, there are so many. And so just Google the word internal signal or something like that, and you will find the answer. So something, fear, greed, impulse, some reaction, some sloppiness, some arrogance, all that internal signal that respond to poor decision. So, so if you're aware of that, this is what you do to make the poor decision, then compare your poor decision with the great decision. So you should have some idea that you made some great decision and you made some poor decision. So compare it, and then you say, okay, is your strategy same or different? What do you do when you make a great decision in trading and you make a small trade come out to be a big winner, and then you cut your losses short because you initiated the trade initially small, and then you have a strategy to build up. So think about that. Is your strategy same or different, or is there some internal signal that you respond to that results in success? So think about that, the internal signal. So when we see the when we see the I will show you a sequence. I have a slide later. So when you see a chart on a, let's say, a day chart, and you see a stock moving up, let's say, so what kind of a feeling you get, what kind of other signals you get in your body that makes you take that trade? So think about that. What kind of a signal you get inside your, like in your body when you see that trade, when you see that symbol coming on your screen. So if you if you are really trying to improve, then visualize that's moment when you saw that chart, or you saw that whatever it is, a bar, a candle, or whatever, and it turned out to be and it was a winner. So do you remember that's what was happening on the chart and what happened to you when you saw that? So do you remember that internal signal? So if you remember that internal signal and what you saw on the chart and what happened to you, then you can what is it, um, mix it, or you can combine it. So combine it and you will create a great result. So think about that. And same goes for the loser trade. So how do you let your expectations get in the way of market signals? So um, your expectation, the stock was trading at 50 and you bought it at 50, and now it's trading at 40. um, and your target was 60, so you bought at 50 and the target was 60, and now it's trading at 40, because you have expectation to make $10 profit, and now it's losing 10 because you have expectation. You're ignoring the market signals. You are ignoring all the things which is happening to that stock. it comes to the break even, and you're not realizing that you are blessed that is at the break even point, and I need to exit. I've been holding it for 50 days. It's now at the break even. uh, we hold it based on our expectations of $60, and that expectations was 2 months ago when we initiated the trade. At that time there was something different, and now it's different. So we are lucky that we closed the trade at a break even, or even lucky that we closed the trade at 45 because it tanked to 40. But because the expectation was that it will go to 60, and we ignore all the market signals. So do you do that? Do you sometimes, another thing, do you sometimes act just to keep active in the market? So I talk to so many traders. So there are traders, especially those who retire. So this is a big problem with those who retire recently. So when they retire, so they had an active life and everything, they were busy, and they go out, they wake up and they have the job 9 to 5 or whatever the business. Now they retired, now they are home, or they become grandpa. So now they're grandpa, and their wife go on, the kids are not home, the grandkids visit them maybe in Christmas time. So they are alone, their wife have gone to see her friends. So they're sitting at home. So the grandpa is sitting at home, and then grandpa says, huh, I need to sell some my 401k, or I sell this house and bring this money to the market. That will keep me active. So they just become active like that, and slowly they lose that money. So don't do that. You can go do some gardening or go on a walk. So, people say, oh, no, so this person, he's 92. And I said, Mr. He lives in San Francisco. And I said, Mr. I'm forgetting, Alvin. So I said, why don't you do, and I'm having a video conference, and I can see, his wife is cooking in the background and all that. And I say, well, so he says this, oh, I am in the market to keep myself active. I said, you look so you have a good health. May I know your age? And he said, I'm 92. So I said, why don't you do some gardening to be active? He said, I live in San Francisco. I don't have any garden. So no, you can still do gardening inside the house. Buy some flower pot and do something. You don't have to trade to be active in the market. You can find some activity. Just go on a walk. In San Francisco, up and down the road. It will keep you very busy and active. Don't have to be in the market to be active. And if you are expert in trading, you don't have to trade every day to be active. So there are certain days where we can ignore the market, just go somewhere. So this is the chart. The top traders act like this. They see the signal. So the top traders are visualizing a good scenario. So and there is a scenario called bad scenario, which I don't have here. So the top traders, they are recognizing a good scenario. So when they see the signal, so they have a process of discovering a symbol, a chart, a price action. So they see something on the chart, and they recognize it. So when they see something, they recognize it based on their experience, based on their previous 15 years or whatever, 5 years of trading, and they recognize that this when I see this, I know that this symbol doesn't matter if it's a dog or cat or lion or zebra, it moves. When I see this, it moves. It doesn't matter if it's a dog, cat, lion, zebra, or whatever. It moves. So when it moves, I know that the move is familiar. So I should not think of any bad scenarios, such as uh, uh, if I put this trade, what will happen? It will go down and I will lose this much money, and then what my wife will think, and what will happen to me, all that. So all that kind of a bad scenario, we shouldn't be creating it. If we are creating it, then we have a problem. So we should be feeling good about it. So we should be getting some kind of an internal signal. So this is the internal signal. We should be feeling good about it. We got the external signal here, which is looking at the chart. And we did the homework. We went into a different mental state of um, stalking that trade and monitoring that trade and verifying all the other, the checklist. when the earning and what kind of options is there, is there any news, why it's moving, how the market is there any upcoming event, and all that going on when we're seeing the signal and going through our checklist, and we recognize it's familiar. So these are external signal. Then there is the internal signal. Internal signal is that we should feel good about it. And then, so we feel good about it, then we go and change our mental state. So in this whole process, when we see the signal and feeling good about it and doing our work, the mental state is being patient. So think about it. We need to pull a mental state patient from our hat and say, okay, I need to be patient. I need to monitor it. I need to stock this trade. I need to go through this checklist of identifying support and resistance and earning and option and this and that. I need to remind myself that I don't jump in with all my might and I initiate a position because I'm making some decision and I could be wrong. And if I'm wrong, then I can close it with a small loss. And then if I'm right, the trade will give me enough opportunity to pile up. And then I will be a big winner. So the time will come when we have to take action. So when we taking the action, then we have to change our mental state. We cannot be complacent and lazy at that time or timid. So we need to become bold. So think about it. We need to become bold and take a bold action, a courageous action. We are not afraid of losing money. Well, at that time, we are not afraid of losing money. We have accepted our consequences. So think about it. We accept our consequences. We are fully committed into the trade and we have a plan. So we know where the trade will go, what expectations we have. So all that we discussed so far. And then take the action. Once we take the action, we verify the trade is executed. Now we adopt a different mental state. And then we go on a monitoring and all the other things we do. So that's talking about the belief and the mental state, and it's a big topic. You need to do some research on it. Now, show you some slides about why traders fail. So these are just the big, bullet points. The traders fail because they have a poor money management. They go all in. They don't realize how much risk they are taking. They have a gambler's fallacy. Uh, they pile up on a trade, or they keep averaging it down just for the averaging down sake. There is no, the market, that the stock is not telling you to average down. They just average down. Or the gambler fallacy is when they lose, they increase the bet. So if they lose $2, so in order to recover $2 and make money, they go and increase their bet on the next trade. So there is no discipline. So they lack discipline, they lack guidance, they lack experience. All this, these are the reasons which you have under control. I mean, all these five, you can control it. It's not beyond your control. Why traders succeed? Because of time, because they know that the time is on their side. So take a small bet and you will succeed. If you take a big bet, even though you learn, but then you don't have a capital. So if you learn, you acquire all the knowledge and experience and you have guidance, but you ran out of time because, you know, took the big bet. Finally, you learn, but you don't have a capital. So traders succeed because they know the time is on their side. They acquire the knowledge, they get experience, and they seek guidance. So they seek guidance. They don't afraid of asking for help. Now here is a uh, mountain a trader climbed. So this is a chart I saw. So I thought I'd show you. So this is this is a big mountain. So we go from the 6 C's. So the first C is capitalization and commitment. Another one is the capital conservation. Then the third one is competence. The fourth is confidence, and the fifth is the consistent return. So this is our objective, consistent return. So it starts on the bottom called capitalization and commitment. So capitalization means your portfolio size should be big enough that you should be able to trade for the short term drawdown should not affect. So in other words, if your capital is it's not like the capital should be like a I'm not saying you go and do some sell everything and make your capital big. So think about it, capital like China wall. So in a China wall, if you throw tennis balls, the China wall is not coming down. You need some firepower, some cannonballs. You need to be Genghis Khan to really bring that China wall down. So if your capital is small, like $2,000 or $5,000, then you have a chance of not you have a low chance of winning in the market. The bigger the capital, the bigger the chances of your success. And same goes for commitment. So on a scale of 1 to 10, commitment. So if somebody asks you, what is your commitment level on a scale of 1 to 10? And the correct answer is 11. And the 10 is not the right answer. If somebody asks, what is your commitment level to succeed on a scale of 1 to 10? Um, 8, 9. Oh, no, I'm 10. No, you're not 10. You need to be 11 on a scale of 1 to 10. Only then you can succeed. Capital conservation. So this is where um, they they say about um, um, that you worry about making money um, later. First, need to protect your capital. So protect your capital. So do you have a strategy to protect your capital, to withhold losing period? So your trading ideas should be such that even though in a short term you lose, but over the long run you will be the winner. Another commitment is ability to trade many markets, ability to trade multiple contracts. So the top traders, they acquire the skill to trade different markets. They have the bigger size capital. They are 11 out of a scale of 1 to 10. Their commitment level is 11. They can do multiple contracts, meaning they have a strategy of buying multiple contracts, meaning scale up. So they just don't go and open up one position at one time, big position, and then they say, okay, I'm done. Let's wait, let's hope this trade works out. And then that's the trade which will turn out to be loser. And there's nothing wrong with that trade, is because we overexpose ourselves. So that's why we are losing. Capital conservation. So capital conservation is a priority. Capital appreciation is secondary. Deploy sound money management principle and implement rigid risk control. So you need to know your portfolio size. You need to know your risk profile. Not all traders are same. So a 25-year-old person is different compared to a 60-year-old. 25-year-old person may have a $10,000 portfolio, and he comes in and he's a gunslinger, and he wants to take that $10,000 to 100,000, and he don't care if $10,000 he lose. So he just keeps going and buying Tesla. So he's trading Tesla, option, weekly option, and then finally 10,000 go to 30,000, cannot go wrong. And then one day Tesla just tank, and that 30,000 go back. And in the meanwhile, he has quit his job. He quit his job and he is trading from his phone. And now there's no more 30,000. So now he and go back to the same boss and ask for the job. Boss, can I come in back? So this is not the plan. Competence, trading competency to match their style and objectives. So traders have different competency different traders have different style. My style is not to trade a sideway market. My style is not to trade Bollinger Band or some kind of a band or some kind of a moving average. So that's not my style. My style is different, and I have a different objective. My objective for one account is different than the objective of a different account. So you have to make sure that what you're trying to achieve, your trading account or your financial account, is different. If you mix it, if you mix your short-term trading and your stock trading and option trading and futures and forex into just one account, you're just messing up. You're not going to go anywhere. So understand your trading preferences, understand your objective, understand your analytical tools and execution capabilities. So not all traders can execute flawlessly. There's a slippage, there's a lot of things going on in terms of execution. So make sure you understand that. Trading process implemented smoothly and effortlessly. So do you have a process where you have implemented it and you're constantly evaluating and improving it, which goes on smoothly? If you cannot have a process, maybe you need a trading buddy to help you out, and you give some, he gives some, and then you can both contribute. So think about that. um, Confidence. So the top traders, they are supremely confident about their abilities. Are you confident in your abilities? The top trader, they're not surprised by losing periods. So if you have a losing period, you're not, you shouldn't be surprised. It's okay, but you should know your limit. Patient and persistent. So this is a mental state. You need to be patient and persistent, optimistic and positive. So all this goes on recognizing that trading is a game which you need to play by the rules and adopt your own rules. Some rules are mandatory, some rules are optional. It's a long-term game, so it's small bets, and there's a skill involved, and sometimes there's a luck. And sticking with the trading strategy, so do you have a proper trading strategy that you deploy in a different market conditions? So if you don't, then you don't know the market condition, you're just applying the same trading strategy and it's not working. And another thing, constantly reviewing, upgrading, and improving. Upgrading yourself, upgrading and improving your trading system. And knowing that this trading system is perfect, it doesn't need any improvement. Is there are some external factors which are affecting your performance. Then the last mountain, the top of the mountain is the consistent return. So this is the key, consistent return, not that you make 200% in one trade and then 100% loss in another trade. Consistent 40%. If you're trading options, 40%, 50%, 35%. If you're trading a stock, maybe 5%, 6%. So the equity curve should be smooth, not parabolic. So if your equity curve is going parabolic, it's nothing to do with you. It's just pure luck that whatever trade you put on, one or two, they were big winners, and then your equity curve rocketed upward. It has nothing to do with you. The way equity curve went up, it will come down the same way. It's just a matter of time. Another thing, systematic trading. Do you have a proper system that you follow day in and day out? Like turn on when you come to your office, trading office, you turn on your computer and then you know. It's like, I'm sure when a cashier or teller come to the bank, you know, she is starting her day. She goes through this, then it start the day, right? And then she goes home. She close the register, whatever she's supposed to do, and out the door. So do you have that kind of a system, checklist, processes? It's hard. It's very hard. Patience and discipline needed. Strong beliefs. Do you the beliefs I told you? Do you have do you know you have a useful belief or you have a non-useful belief? And if you have a non-useful belief, then there are some emotions involved. So what are those emotions involved? You need to get rid of those. So replace your non-useful belief with some useful belief which work, which help you. Are you prepared to bear drawdown? So think about that. No need to constantly temper the trading parameters. So if you're changing your trading parameters, like, oh no, let's try 21-day moving average. Okay, let's change it to exponential. Exponential for this, simple for this. Let's see if it works out. And then you go and see the bar is holding this 21-day moving. I think it's right. 21 day is perfect. And then the next day it tanks because the stock doesn't care about the 21-day. I mean, I don't know. The stock doesn't know your 21-day, and the stock really doesn't know you are applying a simple moving average or exponential moving average. It doesn't know. If it wants to tank, it will tank. So think about that. What you're doing. So here is a matrix. So here is a matrix. So first, let me explain to you what the matrix, the way the matrix is. So at the bottom, the horizontal, you see belief in trading system. So at the bottom is the belief in trading system. And on the vertical is the market conditions. So on the vertical side is the on the vertical side is the market conditions, and horizontally is your belief. So whatever we're talking about the belief, your belief about the trading system you are using. And in the quadrant, there are 9 quadrants. These 9 quadrants are the trader's reaction. So trader's reaction is based on his or her belief about the trading system that person is using, and what kind of a market conditions that trader is in. So this is the market condition the trader is in, one of these three. Let's say there are three market conditions, and the trader has a belief, either the low belief about the trading system, medium belief, or the high belief. So we then three here, three here. So now let me explain each of these 9 quadrants. If let's start from the right side. If the trader has a high belief in the trading system because he has the data to back up that this trading system worked great in the bull market or uptrending market, if the trader can back it up based on the past results and he has a high belief, then when the market condition is favorable, and he has a high belief in that trading system, his mental state, his reaction will be relaxed. He will be relaxed. So think about that. The mental state will be relaxed. He's reacting. He's just uh, what you call. Although I don't drink margarita, but sipping margarita. Sipping margarita, relax, be nothing go wrong. I'm fine because I have a high belief in my trading system, and the market condition is favorable. So I am blessed. I'm blessed. So belief in trading system is high and the market condition is favorable. So I'm relaxed. And if market condition is difficult, but I have a high belief in the market system, I will be confident. So my mental state will be confident mental state. So think about that. My mental state will be confident because I have a high belief in market system, even though uh, the market condition is difficult. So think about that. Now, if the market condition is challenging, the market become very difficult, it's challenging, but I have a high belief in the market, in the trading system, I will adopt the mental state of being patient because I know, okay, there's nothing wrong with the trading system. So it's not internal. So my trading system is internal to me. The market is external to me. I have no control over the market. So when the market becomes challenging, and I have a high belief, I will stay patient. So I will remain patient. Now think about this. If same market conditions, but now I'm changing my belief. So I've been using this trading system for last 6 months. I had some good results. I'm not 100% sure about the trading system. So I have a medium belief. So when I have a medium belief, the market is favorable. I'm still in tension, like, hey, why you are tense? I don't know. Market is good, is moving up. So what's wrong with you? No, I don't know. Maybe market will tank tomorrow. So I'm kind of tense. You see the tense. And then when the market suddenly becomes a little difficult, then I become skeptical. I say, oh no, this is trading system sucks. It doesn't work. I better change the trading system, or I find someone else. So it's nothing happened to the market about that in the trading system. It's you're changing your belief. Market condition is same, difficult. So you're changing your belief to medium and you become skeptical. And then when the market become really challenging, then you start modifying the system. So you start tweaking the system. You say, okay, not a 20-day moving average. Let's put 21-day moving average. Let's change to exponential moving average. Let's see, there's a three crossover of 8-day moving average, or 8 over 15 or 16 doesn't work. Let's do the crossover of 8 over 17 or 17 over 25 or whatever. So you just or set this RSI to 69 instead of 70, or MACD is not this MACD of 212 or the 26 doesn't work. Let's change to 212 and 27. So all that is going on just because the market become challenging. So we start modifying the system, and because of the belief. Now, if you have a really low belief about the trading system, even though the market, so when the market becomes market condition is favorable, you become overconfident. This is where you become cocky, arrogant, sloppy. You put on big trades because the market condition is good. Even though you have a low belief system, you just feel good. You just feel good and you become overconfident. And then when the market become difficult, you start ignoring the signals. The trading system is telling you to exit from that trade, and you're not exiting. You just ignore that trading system. And when then the market becomes challenging because you had a low belief in the system, there was nothing wrong with the system. The same system, when you have a high belief, you're patient. But when you have a low belief, you abandon that system. So you abandon that system. But if you had a high belief in the system, you were patient. But then if you had a low belief, you abandoned the system. So you dump that system, that indicator you bought for 497. Now you go for a new indicator. You look for a new indicator which can give you a green arrow here and a red arrow here. You change your time interval instead of day. You say, okay, I will put on the 60-minute or 65 or 70-minute that this thing worked. Then let's find something else. Let's go for something else, or let's go trade Bitcoin. Stock doesn't work today. I'm going to trade Bitcoin. So all this is going on because your belief. All this goes on because of your belief. It's the same trading system in this. And actually, what is happening is the market is changing. Market is moving up and down. So this is your matrix based on the market condition and what belief you have about the trading system. And then you are reacting, you're adopting a different mental state, and you're reacting differently. So now there's something called attributes of a highly skilled trader. So they are highly skilled traders. They have certain attributes. So we are talking about the high profitable traders, those 11.5%. They have a strong belief system, which are useful. So we need to do this exercise every day or something where we can write down, oh, okay, I need to have a useful belief. So this belief is trash. This one is useful. If it's useful, why I'm not using this belief? Why I'm ignoring it? All that. So a strong belief system, resilient, confident, high degree of mental toughness, do not deviate easily from trading process. So we do not deviate from trading process. Every day is same. If the trade is not there, it's not there. It's because of the market condition. It's nothing to do with our trading system. It's nothing to do with me. I have a process. I have a system. I'm like a cashier. I come in. I have not worked as a cashier, but I'm just, yeah, I did work in a gas station, so, but not in a bank. So come in, open, do whatever opening, and then do the closing, and book is balance, and I go home. So I followed my process every day, 24 hours, whenever I'm trading. So now there's another matrix, and it depends on your skill level. So that matrix was based on a trading system, your belief in trading system. This matrix is based on your skill level. So same, if the market is, so this is the difficulty level of the market. So difficulty level, high, medium, and low. And this is your skill level. So if you have a high skill, if you develop the skill, you spend some time and then you acquire this trading skills, and your trading skill is high. So when the market difficulty level is low, you are relaxed. You kind of relax, and because your skill is high and the difficulty level is low, so you are relaxed. When your skill is high and the market difficulty is medium, then you are in control, because you know that the trade will work out. You have your exit strategies for all the trades. You're not worried about, unless some bomb fall off somewhere, black swan event occurs which is out of your control. Otherwise you are in control of your trading. So you're in control if you have a high skill and the difficulty level is medium. If you have a high skill and if the difficulty level is high, you are in the flow with the market. You are acting based on what is happening. You're not getting tense. You're not getting tense. Now, if you have a skill level of medium, the same market difficulty level is high, medium, and low. The same market, but your skill level is medium level. So you become bored. You're concerned when the difficulty level goes to medium, and then I don't know about this. You can do the research. Arousal. So whatever it is, you get the arousal. So this is something happen when the difficulty level goes too high. I mean, I used to bite my pinky, so I'm reminded, hey, you don't need to bite your pinky when you get tense. It's not like that. So think about that. When your skill level is a medium and difficulty level is high, the arousal mental state. Now the skill level, if low, and the difficulty level is low, we have apathy, medium is worry, and difficulty level high, we get into anxiety mode. And then anxiety brings lot of problem. So anxiety is coming because your skill level is low, and so you're not supposed to trade when your skill level is low, because it doesn't matter what is the difficulty level, you will have one of these: anxiety, worry, and apathy. And if your skill level is medium, it's still you are in a problem quadrant. So these 6 quadrants are problem quadrants. It doesn't matter if the market is difficulty level is high or low, you are in a difficult quadrant. You need to have a so the point is you need to increase your skill level to high. So skill level is high, then doesn't matter what the market is, high, medium, or low difficulty, you are in a better quadrant. You are in the flow with the market, you control or you relax. So think about that. Then your success, different traders having different skills, market is same, having a different results. So think about that. Now, traders, so another concept, traders evolution. So mismatch between competence level and degree of difficulty. So there is a mismatch. The higher the competence level you have, the better the results. We all know that. So stress can be mental, physiological, or behavioral. So think about that. If you don't have a proper competence, if you don't have a proper mental skills, if you don't believe in your trading system, then the market conditions change, the difficulty change, then it creates, you will go through a stress. So I'll show you the metrics. You will go through the stress and it will cause you a lot of damage. So in order to if you want to avoid the stress, you avoid that market because you're not capable of handling that kind of situation. So, you trade only when the market is favorable because, just a second, um, you only trade if, uh, so, so um, you don't have much skills, so but you believe in the trading system, so you just you develop your high skill in the trading system, so you trade only when the market is in a favorable condition, so you will be relaxed instead of stressed out. And then uh, so you wait for that market conditions to be favorable, so you don't stressed out, you relax, and while you are developing your skill. So think about it, when the market is difficult and your skill level is not match with that market, you avoid that market. You don't have to be active in the market. You go and do the gardening or do, walk the dog, do something, don't trade. So use relaxation techniques. So I'm not a relaxation guy. You can Google and YouTube and do some relaxation techniques. Goal is to be relaxed before market open. So now this is something big. Goal is to be relaxed before market open. So when the market opens, you need to be relaxed, not tense. And the only reason you're tense is because you um, I mean, when the bomb drops, then everybody is tense. But other than that, you're not tense, because if you have 10 position and one or two will be going down or something, you're not, you can cut that position, um, go away. And then you just say, okay, I take this money and put it on a dog, which is gonna be lion, then keep my money on the dog, and the dog is, because I got a fat dog, I put so much money that I can't let this dog go away. It hurts, so don't close that trade. So the goal is to be relaxed before market opens. So there are techniques, the way you can relax. Wake up early, don't drink, don't party before night, have a proper sleep, wake up fresh, do some meditation, do some rehearsal, do go through the news, go through your open position, go through the pre-market action, do some mental rehearsal, check everything is ready, and trade the market. So mental imagery. So there is a mental rehearsal you need to do before the market open, and reinforce or modify your belief system. So do some modification of your belief system if you think your belief is not correct. Rehearse the mechanics of trading. So when the market open, certain positions are flying, some positions you get lucky, they're just gapping up. So, and if you're not aware of that this is gapping up, so if it's gapping up, then you need to know what level it's gapping up. It's like twinkle twinkle little, is it gonna gap up with the twinkle twinkle little star, or it's gonna become a big bar? So you should know before the market open where is going to be landing on your day chart. When this trade open, where is going to land? Is it going to land above the resistance level? Is it going to land below the resistance level? What else are you seeing? Are you prepared to watch the 5-minute chart and what action you will take? Your order is your sell order is ready on one side, and you're watching something on that chart on the other side. So all that you need to be aware of. Prepare for the release of market moving data. Reduce fear. So if you're prepared, you reduce your fear, you diffuse your anger. If you're angry, it's not going to work. Clarify all the confusion and transform indecisiveness. So be prepared when you come to the market. Just don't come to the market without, the, let's see what's happening. So someone said, I wake up at 9 o'clock. So I'm talking about Pacific time. So I come to the market at 9 o'clock and see what is happening. So when I was growing back in India, my uncle told me, "Hey, Noshi, you need to wake up early morning because you see all the birds. They wake up early morning and they go eat, find all the things, and the birds who wake up late, they don't get anything." So that's the way it's. So you wake up early in the morning. Don't come to market at 9 o'clock. When it's lunchtime, come like 5:30. So do that. Another thing, 4 factors towards your success. So attribution theory of traders. So this is called attribution theory. You attribute your success to your skill and your failure to luck. So don't do that. If you're failing in a trade is attributed towards your skill, and if you're losing money, if you're winning, then it is also your skill. So don't blame to luck, and don't blame. And then when you win, you beat your chest and say, "Look at me, I'm a champion." So don't do that. That's called attribution theory of traders. Goal setting, have some goal setting, mental imagery, do some mental rehearsal, and then there is a mental stress matrix. Before I show you that, this is what something I want to show you. So based on the beliefs, what beliefs we have, based on the belief, we bet in the market. So whatever belief we have, if we believe that this stock will go up, we do some betting, and then the result come out after 1 day, 2 day, 5 days, something happen, the result come out. So there is the outcome, and then so that outcome, this outcome is a set of outcomes, so multiple outcomes. So it could be loser trade, it could be a winner trade, it could be a jackpot, it could be a wipeout in that trade. So whatever it is, so you're taking a bet. So now you will be based on your belief. So it all starts with your belief, and you take the bet, and then the outcome comes. So the trading or life is a series of bets. So you take this bet, future A. If you have taken this, just think about a tree. When you like some tree, they're just like a tower of Pisa. They're just leaning, and some are growing up. So you wonder, if you have I don't know. That tree is like 1,000 year old. So somebody have cut it, arborist or whatever, and the tree grows in a certain direction. And some tree they don't grow in a certain direction. They grow in all kinds of directions. Like I have one tree, I'm not pruning it, and it's going everywhere. So I need to prune that tree to make it grow properly. So just like that, you put a bet. You took this bet, and your future went this way. You took this bet, your future went this way. Your future is flat, your future is down, and all that. So based on your belief, you're taking a bet in your life. Just like you're taking the bet in your life, you're trading based on the small bets. So you believe, you bet, the outcome, bet two. So this loop is going on. It's like a loop. Now if you bet an outcome and the luck, so all the good results you attribute to the skill, and all the bad trade you attribute to the luck. So if you're doing it, don't do that. You need to be responsible for your loser trade and for your win trade. So don't attribute your loser trade to be on the luck, and all your winner trade towards your skill. So don't do that. Everything is needs to go in the same loop, not the other way. have some goals. So this is a big topic. You can do, set some goals in your trading and in your life. So here is a matrix based on your trading competence. So remember, this is another mental state, 9 mental states. The market condition is the same. Market condition same, challenging, difficult, and favorable. So market condition is same, challenging, difficult, and favorable. So this thing is changing. Market condition is changing, and there are, let's say, 3 different traders. So 3 different traders having different competence. A trader with a high competence trading the market, which is in a favorable market, he is relaxed. A trader with a high competence trading a difficult market, he's focused. He's laser focused on it. So he adopt the mental state of being focused. A trader who has a high competence, the challenge market, when the market becomes challenging, he's confident. So it's the same market. If the trader is competence is low, when the market condition improve, from a difficult or challenging to favorable, he become optimistic. Now I think I'm going to make money. My position will recover and I'm going to make money. The market is moving up and all that. Become optimistic. And when it become difficult, he become confused. And then when it become challenging, he become fearful. So the market condition is same. It depends on the trader's competence. And if the trader's competence is medium, so you see, he become engaged with the market when it's favorable. He become indecisive when the market becomes difficult, and he become angry when the market conditions change, challenging. When the market conditions become challenging, he is either angry or fearful instead of being confident. So these are the 3 mental states we need to aim for: either confident, focus, or relax. And these mental state will come. The market will do whatever it does. These 3 mental state will come based on our high competence level. So it's up to us to work and get one of these mental states. So it's the same market. The mental state is um, up to us. So being competent, highly competent. All right. So the last 2, 3 slides. So putting it all together. So this is about the belief. Remember, we talk about the belief in trading system. So this is the metric. Market condition is challenging, difficult, and favorable. So in the quadrant, there are some numbers: 1, 10, 5, 10, 10, 10. So you need to. So let's say we give a number, favorable 1. If the market condition is favorable, we give it 1. If the market is difficult, we give 5. If the market condition is challenging, we give 10. So we give 1, 5, 10. And same thing in our beliefs about the trading system. If we have a low confidence, then belief in the trading system, we give it low. If it's a high, we give 10. So our aim is to handle. We should have 10 in the second level, 10, 10, 10. 110, 510, or 1010. One of these, not in this level, 1 1 or 5 1 or 10 1. So not in this, and certainly not on the left side. And the middle is also not good. So out of 9 quadrants, 6 are bad for us. 6 should be avoided. So what we do when we believe when our belief in trading system is medium, and the market condition is one of these, what we do when we are relieved. If the market condition is favorable, we kind of relief. We feel relief. If the market condition become difficult and we have a medium belief in the trading, we start modifying the system. We start tweaking the system, the parameters, etc. And when it become challenging, we just abandon the system. And if we have a low belief, we just stop trading. We just stop trading. So in other words, we need to be on this quadrant, and only way we can be on this quadrant, it doesn't matter what the market condition is to have a high belief in the trading system. And the way we can have a high belief in the trading system, if we have done some historical research, some data, some paper trading, we have adopted some better skills, uh, the competence level, and the filters we have, the belief we have, what kind of a mental strategy we have, what kind of a mental state we put, what kind of a mental state we adopt on different scenarios, and then we follow a process. And so we know this is the mental state we need to adopt. Then we know the process we need to follow, and then for that process we need to pull out certain rules and checklists. So mental state, process, the steps, the checklist, and the rules. And knowing that this is a long-term game, so we need to put a bet, small bets. So all that we talked about. So these are the nine mental states or nine reactions. So we need to be relaxed, confident, and be patient. That's our objective. The last slide is um, at the end of the day, or at the end of the week, or at the end of the quarter, you need to evaluate your performance and evaluate the performance of your trading system. So you need to ask this: what to expect from your trading system under each market type. So the market type is either challenging, difficult, or favorable. So either challenging, difficult, or favorable. So if you have a high belief in trading system, then yeah, you adopted this mental state, but then you ask, what is the result, net result? So when the market was favorable, you should know what should be the result. When the market was difficult, you adopted the confident mental state, but what was your expectation? And when you were patient, when the market was challenging, what was your expectation? So this is what it is: what to expect from your trading system under each market type, under each market condition. If you understand your trading system well enough, if you have a high belief or a low belief, whatever it is, you should know the answer. Was your performance outside of your expected range for that market type? So if you have a high belief in your trading system and the market condition is favorable, and you say, okay, when the market condition is favorable, I have a high belief in trading system and I need to trade this system, and as long as the market condition is this, my portfolio is expected to grow 30% or 40%. If you're trading stock, let's say there are a certain number of days in the year where your portfolio definitely will grow 30-40% only if you trade that period based on that trading system and the market condition. So if you have the data and you know it, so you just ready for that market. If you don't get the result, trading result not outside of expected range, then you did good. So in other words, if you were expected to make 30% and you made only 10%, then something went wrong. Or if you made 60%, then it's still something wrong. And the reason could be that you took a bigger risk. If you were expected to make 30% and you made 60%, then something was wrong. And it could be that you took bigger risk. So recognizing that you took some bigger risk and you got lucky, you got away with it. So next time when you trade, you need to be aware of that you took some big risk and you made more than what you were expected, and it could have been worse. So your drawdown could be beyond your expected range. If drawdown level is important, if drawdown level is important for a 25-year-old, the drawdown is not important. He can lose 10, 15, 50,000 and he can come back. But for a 60-year-old, the drawdown level is important. If that is important, then you need to scale down your risk. And uh, if drawdown is important, then you need to trade only when the market condition is favorable. So you wait patiently for the market condition to be favorable, then you can be relaxed. If the drawdown is important and the market condition is challenging and you cannot handle, so you don't trade. Okay, so if trading system stop working, so think about it. If trading system is stop working, then assumption behind the trading system is flawed. And what it is that trading system was not meant to be for that market type. So here, if your trading system is suddenly stopped working, maybe that trading system is not, the market conditions become so challenging that your trading system is not meant to be for that market system. So if you do that, instead of abandoning that system, you need to think that, okay, my trading system is not meant for this market condition. I should stop trading right now and come back when the market conditions become favorable. Because when the market conditions become favorable, I'll be relaxed, confident, and my equity curve will be going through the roof. So think about that. And sometimes the last thing is sometimes there's a law or regulation that close the loophole. So you had some loopholes, something you were taking advantage of, and then it's not there. So it's not there, and you need to recognize it. All right. So all that work you need to do is beyond your comfort zone. So you are here, and if you're not doing it, you need to. So recognize your limitations, and the breakthrough comes when you go beyond the couch. All right. So that's the end of today's presentation, and I'll upload this in the Real Trade Genie YouTube. And if you have any questions, send us email. I'll see you soon. Thank you. Bye.